tryna take it down, place for you just scoring minds, best the bar.
All right, ladies and gentlemen, I got your watch list coming into February 25th, 2020, and today, February 24th, was the biggest drop in stock market history. This is no exaggeration. However, there is some caveats to that. It has to do with, one, the Nasdaq. This was the largest drop on the Nasdaq index. Right here, the biggest one-day drop since the dot-com bubble. So it was even larger than that in the scope of things. So this was the dot-com crash in 2001. The single day drop, this was larger. Now for the Dow Jones still had a pretty ugly day. This was the second largest single day drop for the Dow since October 2018. So you can see that there. And if you guys even were watching the stream, that's actually when we started the stream. This was a very big drop, and then it led to even bigger moves out in December. But today, even for the Dow, was the second largest single day drop in history. Now, the other caveat to keep in mind, this is talking in relative points. So I think it was like the Great Depression was one time the biggest single day drop. They saw a 500-point drop. However, that was 23% of the market. Today, that was 3.56%. So definitely not good, but it's definitely, a different context. So keep that in mind. However, now we still have a lot to talk about. So I want to go over exactly why this drop was caused, this magnitude. If you've been watching this watch list, oh my gosh, that's after hours. Well, I guess you guys will see. If you've been watching this, we've been kind of expecting these waves. It has to do with the coronavirus. I have a whole breakdown. I got a lot of stuff here. I got the breakdown for you guys. I have potential scenarios, and then we made a bunch of plays, and I broke them all down. So that is pretty much what we need to go over. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. YouTube.com/thestockmarket. Come there before market open. We better see you there in the morning. It is free 99. It costs you nothing. You could watch the stock market in real time. We're getting the news. We're interpreting. We're making these plays. We're doing a lot, sourcing the information. Shout out to every single person who was there today, especially the people following our main rule. And this is all we ask, is that you're positive and respectful. So thank you for doing that. We appreciate all of you. It's a lot of fun. So hopefully we see you there. Just, keep it positive, respectful. And again, regardless of what happens here in the market, do not lean too crazy on the one side and just be calm regardless. So, let's get into it. We have a lot to talk about. So why did this happen? The question to ask is, what is new? We come in from the weekend. What really changed? We talked about it yesterday. There was a lot of news and stuff with coronavirus, but now this is the simple explanation, is that the coronavirus is spreading, but now the reactions from the spread and what that has caused, it's now reacting from everything from bonds to commodities like oil, gold, everything like that, the dollar, currencies, and then now stocks are actually reacting, and then now the market is rebalancing and pricing in certain risks on the table. But again, the question is always asking, what is new? What has changed? And there's even a big dynamic in the way news is being processed here, and we'll even see that actually in March. But I'm talking about something other than that. But as far as things being new, Italy and South Korea and the infections there are new, and there's a few different theses around this, but here's what you have to keep in mind. Before it was just China, the people were pricing in the original Wuhan zone. You're going to hear us talk about this a lot. This is the Wuhan zone from the first time we dropped, after the market did finally start reacting to the virus and getting estimates of what the future would be. The market priced that in really quick. And again, this was kind of even the lowest point that it got to. We are back right in the Wuhan zone 2 weeks later. So this is telling you something. So now even if it breaks lower, that means that the expectations are a lot different than before. And that means we have more information than we did here. And that is the key to keep in mind as we get more information. So now what is new? Compared to that, we were just worried about China and their economy and watching the effects there. But now the concern is Italy. And if that leads to a spread in the EU, and the EU is already not really as strong as the US, and there's definitely risks there. But also now, Italy has already been doing poorly. People have compared Italy to Greece. And again, even like 2015, 2016, you've even seen Euro debt crises that's in this last decade. People are worried about that, and then how that spreads and how one member of the EU could really mess things up. And even where it's breaking out now is next to the financial center of Italy in general. So that could affect their finances, but now they're closing off, not necessarily borders, but limiting visas and other stuff like that. But people are saying, people are getting a little bit worried over there. But now there's also South Korea. This is a export hub. This is even where Samsung is, mobile devices, chip makers. It's even right next to China and all the other Asian countries, and they are really mainly doing exports. But now it's pretty much uncertainty. That's what the market is getting worried about. That's why the market is rebalancing the pricing, because they're trying to price in now this uncertainty of how business and trade is going to respond in a world of uncertainty. Because now the global world of trade, the longer this continues, we don't know. It's the same type of uncertainty that the trade war brought, but this is now a little bit more out of the control of politics. So now, people are asking, and this is the other side, is how is business going to be done if there's borders that get closed or segments are shut down, or even the uncertainty of open borders? How will that affect businesses, business decisions, and all that, as well as just the overall economic output? So this is that shift in news that I'm talking about here, because in the past, or even what we usually see, is that the stock market and investors, they digest news quickly. The market gets it in, it reacts, because that is just the nature of most news. It is almost instantly reactable. But this is different because this is news that literally can only be processed over weeks and months. There's literally, even how the virus spreads takes 2 weeks, let alone now the economic reports, and then how long it takes to verify and then test and then see this. And now we have to see what's going to happen even in Italy and all that. And that is even now my next thesis. This is one of the main things I said, is that the market is going to be able to respond quicker now to the coronavirus because it's outside of China. And the minute it gets outside of China, we're going to get real statistics and data on how bad this virus is, because now these countries aren't going to hide it like China. So now with the mortality rate and the real R0 and how this thing spreads, that is what this is going to show. All in all, this still is going to take data. It's still going to take time to get this data and be able to respond. So this is why it's different, because this is news that takes time to process. That's more uncertainty, because it's just more macro news and a macro effect that's leading this and causing investors to worry, rather than micro news or stuff that is political that would affect the macro but is still kind of in control. So this should explain everything, this and that. This is a mix of, what other people are saying as well as my theses as well. But to me, just looking at the prices, price tells a story. And when looking at how everything is responded, it's what has fundamentally changed. What is new from when we didn't go down and when the stock market was going up, or even from now, even the trade war. So keep that in mind. Another thing to keep in mind, sadly, is Trump tweeted, he said looking like a good time to buy stocks. But last time he tweeted something around that, it was December. So about 2 months after the biggest drop in October, and stocks had a 30% rally from there. So I'm going to keep that in mind. I want to see how this will affect things. But here's the key for all of you guys, and understand this. This is why you can't freak out on any direction, and there's going to be opportunity. I was balanced more towards puts, and I'm going to get more puts, and you guys will see I did even buy calls today too, which you guys are going to see in the breakdown of plays. But there's opportunity. This is from the great Tony Robbins. Some people freeze in the storm. Some people ski through the storm. There's opportunity on both sides. And now for you guys, do not get fooled. Do not get caught holding on to an idea too long. Don't hang on to an idea, a dream, a possibility of what it's going to be like. If you're, it's okay to be wrong. Just take the L's quickly, take the L's small, and get ready. But the market is moving so much. Even this is something I really pointed out here today, that a lot of people, you don't have time to get caught up with feelings, emotions, or this and that. Strategize and really have a plan, set a budget, because these moves are huge. And since it's such a big down day, this would have been a normal rally day. You guys would have been crazy if the market went from 321 to 325 in an hour period, and then even just come back. It's doing a full day's move in an hour. So you have to keep that in mind, because that is going to create opportunity. Even then, in the next 2-3 weeks here, I would think there's going to be a great pickup on long-term stocks, even with all this stuff coming down. And that's what we have to do, is just, it's all about timing and scaling. And that was a big thing I pointed out for all of my plays today, is that I was just looking at the clock. Prices were definitely important, what was happening in the market, but to see how it developed, it wasn't a matter of if or this or that. It was simply just watching the clock and how things moved based on the time. That gives you an idea of how the market's flowing and what people are doing. So now here's probably the main thing. What's going to happen tomorrow? I have a few scenarios. We did talk about it on stream. You could watch the recap. We saw the drop, and we played it pretty smooth. We got some plays here. We took some profits. We got to ride this. We're in plays. We even grabbed some calls. We got to really just chill and kick it here again. It was actually a pretty relaxing day in the weirdest way possible. And then as it was coming up, I was expecting a bounce, and this is what worried me, and this is what's leading to my theories here. I think tomorrow's going to be pretty ugly, simply because this is a visual representation of volatility. This was not as volatile. This is what you guys got to realize. It was just going straight down. Sure, there's the pre-market, then it went up and then went down. You guys might have been surprised how I was able to, predict that there, but take a look. You saw it. It was just literally what happened in the morning. And that is going to be a good indicator. How it moves pre-market and then in the morning could tell you a lot about the market there. But this is a true sign of But I was expecting it to come up. I said right above 325, right where we hit towards the opening highs, and then come down. And I said if that happens, it would be a bloodbath. I said that again. Watch the stream. We were saying it for hours, and that actually occurred. And why this is bad is because this is volatility in such a short period. You're seeing people drive the price high, and then it goes low. That's a big push and pull. That means there is uncertainty. There's literally volatility. It's changing states quickly. So as far as my scenarios for tomorrow, I'm expecting either a straight gap down and a large loss in a similar range, maybe between 700 to 1,000 points, or I'm going to be looking for a gap down, setting a new low below the Wuhan zone. Again, that repricing. So now the market's going to break it because it hasn't broken it throughout the day. Only time it really breaks those key levels is through a gap down. So it's going to gap down, hit a new low, and then it's going to pretty much rise up back to where we close or somewhere around the Wuhan zone. And again, I'm giving almost every scenario to a degree. I am kind of biased towards the downside, but I'm going to keep my eyes open. And I have these possible scenarios so that as we see how pre-market is and how it starts to open, we'd be able to check off a few of these in a process of elimination to see what the market could possibly throw at us tomorrow. Another possibility is that it could gap down, followed by an early sell-off, but with a small bounce, but then it doesn't really kind of close green. So it could gap down or open where it's at, sell off quickly, bounce up a little bit, and kind of just kick it there. Or then finally, it could either gap up or a big move up, just straight rips up, then a sell the rip off event, where it could break us through a lot of support levels, but then it'll sell the rip and then pretty much come right back into the Wuhan zone. So I'm pretty much expecting us to stay in the Wuhan zone, but more likely I'm thinking a new Wuhan zone. But again, that's the key with this. I'm okay with being wrong on any of this because this is, like I said, the uncertainty in the time of all this news. I don't want to be too quick to react. So if that doesn't happen, again, this is just going to start a whole new wave cycle. So just keep that in mind and how that has played out and what could possibly happen. So that's pretty much it. I hope you guys have fun today. Hopefully you enjoyed it, and hopefully you keep your head in the game. Do not panic regardless, baby. But let us get into the plays. All right, so we did a lot of plays. I broke it down for you guys so you guys could see what I'm talking about with budget control, taking profits, and the importance of getting these plays. And you can see even how I diversified myself to give myself some of this exposure and as well play the upside. There's opportunity, ladies and gentlemen. Don't get too caught up on an idea. I do like the puts, though. Again, we've been talking about some of this, this macro negative effects coming to life. So I'm starting to see things develop. And again, if those pop off indicators, that's why I'm more lean towards the put side. But I've been here before. I've been crushed on puts too. And this is a very dangerous time with the puts. So you want to take profits, especially the short term, and be very, very nimble. I said it today, man. They'll let you get rich for a day. The market, they don't care. They'll let you get rich for a day or two and then just rip it right away from you if you get greedy. You will get taxed if you try to get a lot, baby. So be careful of that. But what I did here, I sold that TLT debit spread. Remember, that fat finger ended up benefiting us. So I had like 95 of them or something, or like 89. I don't know. I still have like 30 something left, but I was able to sell 55 of those contracts at 35 cents. I netted $1,925. Then I sold 3 of the 4 TLT 150s. And I sold 3 of those at $294. Then I sold that Boeing put, and I thought I liked the put, but Boeing had more stability, and I still held on to the Roku. But again, that's one thing you'll notice in all of this. I still got to keep all of the other plays that we've had, unless I've told you guys that I've sold off on them. We still got that Roku and stuff, but I got 160 for the Boeing put. Then that SPY Crazy YOLO, remember that play? It was like $150 to 75,000. Well, we had an opportunity to make it free, and this is what I told you guys. This is kind of that play was so low odds in general. But remember, I said the 3 tiers. When the cheap insurance, if there's a big drop, that cheap insurance will get expensive. That's what happened. This is how we made it free. A lot of you guys were asking, how do you get a free trade? We bought this debit spread. It was a March 20th, 235 put, 220 debit spread, but we bought 50 of them for 3 cents each. So I was able to buy 50 of those contracts for $150, has a max gain of $75,000 if the market went down 30% and reached that 220. So keep in mind, we spent $150, but now today it went up. I was able to sell 25 of them at 7 cents, and I got back $175. So remember, we put out $150 and we collected back now $175. We got more than we spent when we first made the trade, got all of our initial investment back plus profit, but now I have 25 of these contracts. So again, it's just a crazy insurance play, but if anything did ever go bonkers or anything like that, or even if the premium gets crazy, if there is another sort of big drop here, it has a $37,000 max reward with half of that, and we have that play entirely for free. We even got to cash out a little bit of profit. Then I sold those Redfin calls in May. Even though they had time, they held up a little better, but this was on the smaller account. I just said, I want to try to take some profits there. I didn't want to lose it because we were holding that play up like 500 or 700%. So we still walked away with 500%. Didn't want to risk the profits there. But all in all, you add all these up, that was $2,704 net realized. So now I made a bunch of plays, and this is the key to pay attention to. This is what I said with the clock. Not only was it how I scaled the plays, you guys, I was saying I was waiting every like 30 minutes or every 15 minutes. I would jump the gun every now and then, but we were controlling it with the budget, and this is something to notice. Notice this is the exact order of the plays. So this is organized, and that I bought this one first, then this one, then this one, then this one, then this one, then this one. So keep that in mind, because pay attention to the balances. So this is now what I ended up doing here. I grabbed February, March 6, 177.50 puts. I grabbed one of them for next week, 58 cents, $58 for that. Then since we sold some of those TLTs, we got $300 back roughly. I put $110 back in for next week instead of the short term, and we're still holding one of the short terms. I did 10 of those 162.50s at $110. So remember what I said about TLT. If you already have the plays, I didn't sell those April ones. I sold half of the March ones because we had those, but you got to be cautious buying back or spending even more money on TLT if you're going to sell and just buy back in. So be careful. Otherwise, you're just better off holding off the original position that you've got or ghetto spread it. So $58, $110, and I got Caterpillar, and I really like this one. And this is really all the plays. I'm going to be looking at these, and I have a few other things I'm going to show you afterwards, but it's now monitoring all these plays, and you could see how they were all spread out. But one big thing I was going for plays was one, companies that would have exposure, and then stocks that would move a lot and then would have cheaper premium. But I wanted the companies that were either laggers and leaders, and then also the ones that didn't have high premium, because most premiums today were up 300%. You don't want to get caught buying that. So I was trying to narrow in as we started making plays later in the day on stocks that were only up like 100% premium max. And it was very difficult to find. But got Caterpillar March 6, 110 puts at 28 cents each. Spent 112 total on that. And then I got some Apple March 6, 235 puts, 40 cents. Again, broader exposure there. Got that for 120. And then I bought calls on JP Morgan. The banks have been lagging, and I like them. Some people would argue that the rates that they do bad in the lower rate environment. I think the banks can find a way to do good in there. And even then, even if there is any bounce or anything like that, I wanted some exposure to the finance sector, just considering how they've moved. So I got the 142 calls March 6, 8 of them, 17 cents, $136. Then I did an Amazon strangle both ways. So I did it for next week, and these are very far out. And this is a premium flip, if anything. If there's another big move or follow up, Amazon premiums start to go crazy. That's the benefit of some of these expensive stocks here. But I grabbed a March 6, 1640 put for $160, and then a 2260 call at 165, 325 total. So at close, I'm up 31% on the call, and the put's only down 7%, but at one point we were up 30% on both the put and call as the market was moving. That's something to keep in mind. Even the JP Morgan calls, even though the market came down, we still ended up 11%, but we were up like 20, 30% on those. So this is something going on with options. Again, even if you want to buy calls, you got to be careful to watch out for the premium, because even when the market was down, the premium on the calls was still high. So you could make, again, that's what I'm saying, there's opportunity both ways. It's the option market and IV going crazy. You've seen it. It's like earnings on everything. The market could act irrational. So we got that. But again, notice I'm starting to get bigger. As I'm getting later in the trades, I start increasing the size. Then I got HYG, high yield credit. I said they were broken a little bit. I'm going to keep my eye on them, but I think they're operating a little bit sus. And it caught my attention there. I was expecting it shouldn't have sold off as much as it did today. And that means something. And again, high yield credit and corporate credit and all that has a bigger macro risk. So it's kind of like the Japanese yen thesis. If a trade has a certain correlation and it kind of breaks that, but it's also kind of a riskier asset, there's a reason why. It's kind of concerning. So I got these, but the best part was I got May. And there was a lot of put activity on this today. A bunch of sweeps went through, but I got May on it. So I was cool spending a little bit more money. I got till May versus the Marches where I didn't spend more than $150 on any of the Marches. Okay, except for the strangle, but yeah, Amazon premium flip. But then I got Microsoft April 210 calls, 10 of them, $380 more. And I wanted April because, again, if you guys are expecting a bounce, here's pretty much what's going to happen. If you do want to buy the dip or play any of the calls on the upside, it is not just going to bounce straight up. That could happen, and that would really benefit the calls, but try to get April, May calls, or we even wait and let it kind of do one of these little mini bounces to then get time on it. But factor in a week or two of theta burn for the market to kind of chill and do nothing, and then make a melt up if it is going to go up. And then this was a crazy play, regen. So this one was very, very unique, man. We caught this, and I chased this. You could watch. You guys have not seen me do it, but this is, again, it held a lot of weight with what it did. The fact that this was up 7%, and we caught it when it was down 2-3%, and it came up 1%. But some people said it's an upgrade. But if you've watched our option videos and beating the market maker, I think that's the title of the video, how I beat the market maker. When the option chain starts going crazy, it's telling you something. It wouldn't do that simply because of an upgrade. So some news, I think there's a rumor they have a conference in 4 days, and then now there's also at the same time a bunch of stocks in the biotech were getting killed. So some people said that they could gain like 50 or 60 bucks a share off of Novartis' drug failing, or now they have this conference, they might unveil something. But again, the fact that the option chain was going crazy, but again, the underlying asset, the market was down 1,000 points, and you're telling me this thing's ripping. People are looking for a place to put their money, or again, it wouldn't do that equal and opposite reactions. It was doing that for a reason, and you could see the confusion in the option chain. So I was trying to snake some of these. I couldn't get filled, and I settled and I chased, and I was scared because I don't feel comfortable chasing, but I wanted my hand in the cookie jar, so I bought this play. I thought I paid too much. I was over here. I bought it at 240, and then a few minutes later, it shot up 366, even hit like 4 something at one point. We bought the 480 call, but I ghetto spreaded this, so I made this play for free. I actually made 10 bucks, and I still have my hand in the cookie jar, $500 max gain, because as it shot up, I sold these. I shorted the 485. So we bought the 480 for 240. It shoots up. I sold these at 250. So it's a $5 difference, $5 per share. You can make that, but I got 250 when I spent 240, so I made 10 bucks. So even though it was a play I bought, instead of spending money, we actually got to walk away with plus 10. And then finally, towards close, if you guys should definitely watch this recap. It was pretty cool to watch live. If you guys were seeing how we sniped this, we were chilling as it was coming down, but then I said if my theory came up where we saw and actually got to see real volatility, it went to the range, started tripping out. So all the way up, I started to scale in on a play I wanted, but I was worried about the premiums being too high. So everything was up 300%. So that's why I went March 6th. Even though I did a larger amount, I went for the ones that were depreciating, because the March 6th, the shorter times, those are going to be the contracts that'll shoot up 300, 400, 500%. But then once there's a big bounce like that, because that was a big dollar move, they will depreciate heavily. So I was able to get these at like 100% premium, which is still bad. So it's still a big risk. But I got 10 of the $25 calls for March 6th at the 300 at 30 cents for 300. Hopefully they add more contracts on those tomorrow so we could ghetto spread those. But I like those. But since we hit it right on the head when the market dropped, by the end of close, we were up like 40-50% on those. So it was a very, very nice move. And that got us 40-50 extra percent coming into everything. And then lastly, these ones weren't at a premium, because remember, we've been playing these. We have Marches. Those were down 70-80%. They bounced up, but they were still down 20%, meaning we spent more for them. So even after today, they were cheaper than the first Wuhan outbreak. So keep that in mind. That means the market was pricing in more, and because time has dropped. So I held those plays, but these plays, we only got them at like a 20 or 30% premium, but they weren't up as much. And I got UAL, but I got more time. So I got April 17th, 55 puts. I got 10 of them at 40 cents for $400. And then finally UNH, because this was another factor that could be weighing on the market that a lot of people might have missed, was Bernie Sanders been gaining a lot of steam. The market doesn't like him, especially healthcare, and why I really decided to do this. And I said I'll take the premium and buy. I didn't care because that play was up 300% already, but why I chose to buy it, because this outpaced everything, 7.8%. That's way bigger than 3%. Again, some of the big tech names, Nasdaq, they dropped 4 or 5%. 4% on Amazon, anything like that. So that was a big drop. So I think that had a little bit on it. So I said I'll take a little bit, but that's why I kept it kind of small at $65. But now the total of everything of that I spent was $23.76. We realized $27.04, so I walked away still realizing $328, but we turned 5 plays that we sold out of into 12 brand new plays, and then out of that $2,300, $600 is in calls. So 25% is weighted towards calls, and most of them have upside or high premium like the Amazon. So if there is any sort of bounce, that 25% could at least help us break even, if not make us profit. But now, too, if there is more downside, we still have plays for free that we're holding, but then now more exposure to different industries and even more time like May and even April off of those same moves. So hopefully you guys picked up on all of this. Pay attention. I mean, you could watch the stream on there. Again, the key here, though, is balancing. It's both timing and volatility. So how do you trade volatility? What do you buy during volatility? None of this is a recommendation. Options trading, but we're going after stuff with exposure. Again, like we said, it's what's causing this, but then what's reacting and how is it affecting stocks? You know, bonds. I don't like paper gold, but I'm getting stuff with exposure. Even Caterpillar, that's why I like it. We're looking at finances, how this is going to relate to banks, the HYG, bonds, then finding the laggers and leaders. But it's all about, you know, it's both timing, different time frames, using the budget, scaling it out. If as long as you're controlling, you know, how much money you're bringing in versus how much you're bringing out, you could get in here, you know, with a lot of exposure, but relatively risk-free or lower. You don't have to go too crazy on it as long as you're just keeping track of how much money coming in and out. So that was definitely the big key. Hopefully you guys learn from it. As far as everything else to watch for tomorrow, there's a big, you know, I still want to watch those Rokus. I am going to watch healthcare because of that Bernie Sanders stuff. But the key now, we're going to have HD and Macy's earnings. Those will be important. But I want to watch the stocks like J&J, HC. I want to see the companies that were more value that are harder to drop. But now if people start selling off those big names, those are going to be important. Watch Procter & Gamble, Intel, but the key is going to be now making sure they don't have premium. So that's my biggest gripe with all those. But now too, watch Palo Alto Networks. They guided down. I didn't want to play this, even though I said it yesterday, and I didn't end up doing it because it was such a big drop. Earnings is already risky. There's so many external factors, but this one was a good one. They got pummeled. And even the 40-cent options look like they're going to hit the money. Otherwise, everything was kind of expensive. But continuations, either bounce or if this really sells off, if tomorrow's bad, I'm going to keep my eye out for that. And then lastly, beyond, our play didn't go down too much, surprisingly. So I still have not averaged down on that. We got to keep that in mind. Going to keep watching it. I want to see how it reacts, but that play is still kind of a focus. That's why I wanted to see how some of these earnings report even tomorrow. And I want to see how they report and hold up. And this is going to give us more confirmation for beyond in the end of the week. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. Keep your helmet on, baby. Again, balance the books. That's what all the plays are about. Get exposure. Make it free. You have an opportunity. You're going to ski. You're going to freeze. It's all on you how you want to take it, man. All you got to do is believe in yourself. You choose what to believe. Don't let your emotions knock you out of opportunity. Again, risk management. Treat it. You a robot. You in a cult, baby. You a sniper. You got to be smart. Balance the books. Now is not the time to lose your head. There's going to be opportunity. And finally, it's not just one day. This is going to spread out over the week. So you need to be ready and prepared. You got to look in the future. Don't be short-sighted with one meal, baby. We got to keep eating, baby. So I love you all. I appreciate every single one of you. I'm going to see you in the morning. I hope you're ready. I hope you flip the switch and let's go.